What's going on, guys, and welcome to another video by OD the Trader. Today we are discussing the market maker model. We are going to go through exactly what I like to see within the market maker model and why I love to trade the market maker model. ICT once said if there was only one model he would trade for the rest of his life and no other, it would be this model, because if you follow these exact steps, it makes it certified. Now, I say certified, we all know, well, I hope we all know, there's no such thing as a 100% win rate. But most certainly, you will have a high win rate within this model. Getting funded, and for the past like 4 or 5 months of trading, this is the only model I have been trading. Now, I have recently just made a switch to my trading, and that's okay. Changes are allowed to be made. Trading is all about evolving and bettering yourself as a trader. And this is only because I've now full-time stopped trading SP, US 500, whatever you want to call it. Strictly because I had better results off Euro USD. I was more confident within my trades of Euro USD. And I also just wanted to trade one session. I just wanted the New York session for Forex. I didn't really want to be trading, watching the AM session for SP, and then also watching the PM session as well. So I'm just trying to simplify my trading and do what works best for me. And that's okay. As a trader, you want to develop, and you will find out these things is part of the process. Okay, so within my trading, yes, I've got probably a few more models now because Euro USD isn't always showing you the market maker model as much as SP, but it is still my number one model. And as I said, this is what made me who I am today. So within the market maker model, preferably you want to see some sort of origin. Origin is what basically starts the market maker model off. You could say it's the engine that kick-started the model into play. It's an area price where it accumulates and it funds the price action either higher or lower, depending on which way it starts. Okay, and then you basically want to see this. You want to see a displacement higher, and then you want to see some sort of an accumulation phase. Now, this could be as simple as a retracement down like this and then higher, retracement down like this and higher, how I've drawn it. Or it could be something like this, like a consolidation, higher, consolidation, higher. There's no real black and white answer to it. You've just got to teach your brain to see it. Now, and that just comes with data logging, data collecting, back testing, all of that. The only way you're going to be able to see the market maker, like the back of your hand within price, is if you teach your brain to see it. So this is why it confuses me when people say, oh, back testing isn't worth it. Of course it is. You need to teach your brain to be able to see things. The same way you learned the ABCs, the same way you learned math, you had to go think over things over and over and over again. It's no difference in trading. You have to teach your mind to see these things, or even if you know the information, you're not going to be able to see it in the charts. So you're not going to be able to execute in the way you want to, okay? And as you can see here, we have some sort of smart money reversal. We could have a hour 4, let's say, hour 4 FEG here we've gone into. Let's say our bias for the day is bearish. London has started. We've gone into an hour 4 FEG. We've had a smart money reversal. We've had a break structure. And we get to here. This is what we call a low risk buy. Now, if you enter at this point, you split your risk. So if you are usually in a trade and you usually risk 1%, for this entry, you risk 0.5. Now, why? Everybody knows, well, not necessarily everybody knows, but if you don't know, the link will be in the description. The power of 3. Now, power of 3 is an area of accumulation, manipulation, distribution. It's to trick traders into thinking price is going to go, for example, for a bearish example, or bullish example actually, price is going to go lower, and in fact it will run higher and seek higher prices, and it will take this as liquidity. So, you don't know when this is going to happen. So price could either here do a smart money reversal, an area accumulation, go lower, and then take this as liquidity, and then seek higher prices. You don't know that. This is why we have a low risk buy. This is why we use this as a confluence. I never use this as an entry, ever. I use this as a confluence towards my bias being correct. So I will let the low risk buy go. I'll just let price take it. That's fine. You can have the better entry. And I'll wait for another breaker structure. That way we've had 2 breaker structures. We've also had some sort of liquidity sweep here. We have also touched into a higher time frame PD array that is rejected off. And we've also have the bias of being bearish. So all these confluences team up and give me so much confidence within this trade. So price goes back into a premium fair value gap, and then we go lower. Always full TP at the bottom of the origin. You can obviously TP along the way, partials, or if you want you can take it somewhere a bit higher. That's completely up to you, but I always leave at least a 20% runner to the bottom of the origin. Now, I want you to also consider this. This is an old FEG. You tend to see areas of accumulation. Why is this accumulation? Because An accumulation could look like a retracement. It could go sideways like a consolidation. It could go down. It could go up. This area price is always an accumulation, and it tends to happen in old areas of accumulation or in old price raised near areas of accumulation. As you can see here, this area of accumulation here completely matches up with this area of accumulation here. Okay, we are going to go through some examples today, so don't worry. Another thing I want to consider up here, I want to see, especially if you're trading SP, Forex isn't as important because there's not really as many correlated pairs within Forex. But for SP, you have things like NASDAQ and obviously SP. And these indices, they contain the same stocks within them. Therefore, they're correlating. So, when one pair makes a lower low and another pair makes a higher high, this shows real manipulation within the market and that we're going to have a change in the state of price delivery. Therefore, change in direction. So, just as a quick example, here, let's pretend this is SP and this is NASDAQ. I can see price has gone up here. High, low, high, low, higher high, lower low. Price here has made a higher high before going lower. Okay? And it's correlated pair. As you can see, it's gone here. It's gone high, low, failed swing high, low. So this has made a lower high. Okay? And this is the correlated pair. Therefore, this shows real manipulation within the market. Okay? SP is key, in my opinion, if you're trading indices. It's not as important in Forex because, again, Euro USD, GBP USD, yes, they correlate to a sense, but they're not exactly correlated pairs. Like, they don't have the same factors that bring them together as SP and NASDAQ do, for example. Okay, I am going to show you an example of a market maker model today. Let's go over to the 5-minute for Euro USD. Okay, so this is the market maker model. Right here. Here, we have our origin, an area of accumulation to form the model to start. Okay, and here we look. Accumulation, displacement lower. Accumulation, displacement lower. Accumulation, displacement lower. Accumulation, displacement lower. Here, we have the smart money reversal. Now, there was an SMT today with GU. As I said, it's not as important for Forex. I still like to see it. For me, it's like the icing on the cake. I love to see SMT. But if you don't, you can still enter the trades. What is this area price here? This is the low risk buy. Now, if you do enter at this point, that's okay. But what do? You halve the risk. Why? Because it could be a power of three. It could be accumulation, manipulation, and then distribution to continue lower. So this will be the low risk buy. Now, all you're waiting for is a breaker structure. And again, another entry. Entry here, as you can see, within this fair value gap here. And you would enter it just like this. I always like to go to the beginning bit of the fair value gap just so I most certainly get in. Target in the top of the origin. Relative equal highs, they are equal highs. And as you can see, price did exactly that. And that would have been over a 3-to-1 trade. What would have been a fantastic trade. Okay. The market maker model is incredibly goated. Now, you can have sometimes sessions where, again, another market maker model here. Sell off, area accumulation, like a power of three, accumulation, manipulation, distribution. And then we have accumulation here, displacement, accumulation, displacement. We reverse, but as you can see here, it's not really given as an entry. Yes, fair, you can got entered here, but I wouldn't like to enter it that far up because remember, you always need to consider premium and discount, and I never like to long in premium. Okay. Another thing before we go is I want you to look at this price action. What did I say? Where price accumulates, it usually accumulates in the same area. So, accumulation here. What happened opposite? Accumulation there. Accumulation here. Accumulation there. Accumulation here. Accumulation there. Okay? Fair value gap near the accumulation. Happened there. Okay? You've got to teach your brain to see these things because it's not going to teach itself. Okay? And as I said, we would like to see SMT at the bottom. SMT divergence, but it is not necessarily needed for Forex. For SP, I would most definitely recommend adding SMT divergence to a required thing within your trading. So I'm going to leave this video here. Before I go, I have teamed up with a brand new firm. They are called Traddoo. They are going to be game changers to the scene, ladies and gentlemen. You They are a prop firm that allows you to trade straight off TradingView. Now, no other prop firm does that. It's all MetaTrader based. They also do lots to dollar conversion, so there's no more calculated locks and all that shenanigans. It is straight, okay, I want to risk $50 on this trade. And the best thing about this firm, they also have an educational academy. So even if you're not too clued up on trading, you want to get into the prop world kind of game, you can contact me or any other YouTuber or trader, there's Instagrammer that is within this educational academy, and learn straight from us. There's people like Phantom, Day Trading Ralph that I've also teamed up with this firm. I've spoken one-on-one with the CEO of this company, and honestly, there is massive things coming for this firm. They have shown proof of having the financial backing, so there's no worries about not getting paid to all of us that have partnered up with them. And honestly, I think within 6 months, this firm is going to set the world alight, and it's within a year or two, it will be the biggest. I would be surprised if it isn't. So we'll leave it at that. Remember to check all the links down below. I've got my mentorship, LD mentorship. I've also got my free Telegram group that we help each other trading in and out the day every single day. And also all the links to Traddoo you can check down below. All right, take care and peace.